Hello traders and welcome to this live intraday strategy webinar. Today is Thursday, January 5th. Great to be with you guys this morning. Eileen, Graham, Juan, Conwall, Mark, Pete, Pooja, Vesk, we got Ziad in the house. Good to be with you guys all this morning. So, not as much to go over as yesterday. It was a pretty packed session, but I do want to leave as much time for your questions as we head into the first major event risk of the year. Tomorrow's non-farm payroll reports. Keep in mind, again, we'll go over the implications of that. We also have the Canadian employment report as well. So dollar CAD, which has been in our crosshairs for the last couple of days, will remain there. We'll go over dollar yen, Kiwi dollar, and dollar CAD from yesterday, as well as an update on Euro Oz. Kind of losing focus on Euro Oz for now. I'm kind of shelving it, but we'll go over that setup as well. Euro yen, is it finally turning lower? Looks like we may have some interesting price action here today. We'll touch base on Aussie yen. Pooja, you got me all interested in that yesterday, so I've been in and out of that. Aussie Kiwi, quick update, that's heading higher again towards our target. Nat gas, obviously for Conwall, I saw your tweet there. Gold, crude, and that's on my list. So if you guys have anything I didn't mention, any pairs you want to review, any questions, as always, feel free to post it on the message board. All right, let's jump right in. So, quick update. We did get the release of the ADP employment number, coming in slightly weaker than expected. We were looking for a print of 175,000, coming in at 153. This is off a previous read of 216,000. Keep in mind, ADP, again, private sector payroll, not really as strong, a broader consensus figure as the more encompassing non-farm payroll report we'll get tomorrow. A lot of times we'll make the mistake of sort of correlating the two. They do largely work together. They do largely move together. But as I've always relayed to you guys over the years, ADP is notorious for missing larger swings in non-farm payroll. So, while they will broadly move together, by no way do we want to shift our consensus for non-farm payrolls based on this solely. That said, non-farm payrolls for tomorrow are expected to come in at 180,000. Unemployment is widely expected to uptick to 4.6, but that's going to be really based on the labor force participation rate. And a caveat that is something you'll hear me say every single month. You're probably sick of it, but when labor force participation expands, it'll tend to put upward artificial pressure on the unemployment rate. And likewise, when the unemployment or when the labor force participation contracts, the labor pool is smaller, it'll tend to put artificial upward pressure or downward pressure rather on the unemployment rate. So you'll see that downtick to 4.6, but that necessarily won't be a good thing if we see labor force participation contract. So keep that in mind tomorrow. I will tweet these out the second that they hit the wires here. For that print on non-farm payrolls tomorrow. Relative performance for the greenback heading into the U.S. Open looks like this. It's sort of mixed. You do have the yen, euro, Swissy, and Aussie with some decent gains today. Kiwi and CAD are kind of lackluster. Sterling with a decline of 0.23%. Largely, the dollar is weaker against most of its major counterparts, but I do want to highlight on the index, DXY, that same key region that we looked at yesterday as support. That's exactly where we found some support on this rebound here today. That's 101.80 into 102.05. Today's low so far is 101.71, so just below that key 618. Nice pivot range and price. So I want to curb my appetite on dollar shorts, although I do expect that we'll inevitably get below this. As it stands right now, you want to be cautious on any dollar short exposure while above this region. You kind of want to see this thing give out to get some conviction on a downside play. Let me also just adjust this retracement. Okay. Also, I do want to note that this does constitute an objective break of the weekly opening range. Here's your weekly open. Looks like we broke to the downside. We need to kind of keep momentum and price below 102.70 here to really get this thing going. But that's sort of the mindset I'm working with right now. We don't have any structure to the decline, so I don't want to get overly excited. And there is some divergence, as price action did make a lower low. The oscillator made a higher low. So I'm kind of looking for some probably sideways action here. Again, major key event risk on tap tomorrow for the dollar. Again, I favor dollar shorts broadly speaking, but we do need to maintain this level here below 102.30. Any questions on the dollar index? Or where we are relatively speaking in the greenback? So the risk on a move sub 101.80 is to 101.11 would be a 618 retracement, and then you have that parallel, which has offered some really nice pivots in price throughout the year. Okay, and that comes in just lower, right around 100 spot 60. Juan wants CAD yen and sterling CAD. Interesting. CAD yen and sterling CAD. Okay, no problem. We'll take a look. Copper, Conwall, got it on the list. Yeah, Juan, no problem. My pleasure, my man. I don't have any necessarily setups in play on either of those, but we'll take a look. That's what I'm here for. Okay, so if there are no questions on the dollar index, let's jump right in. First things first, from yesterday, we were talking about the dollar yen. So dollar yen, it's been a lackluster trade, but we've been working under the premise that we're expecting some sort of pullback. The major key support region that you kind of want to see here for dollar yen is this 115.50 into 116.08. Now we're currently trading at 116 spot 18, just above that key support region, although we did dip into it. This is the 618 retracement of the decline. This is the August 2015 swing lows and a nice pivot in price. I'll show you in the live charts in a moment. But more importantly, just objectively speaking, the median line off the lows. Okay, resistance, break, support, that converges on that region basically in trade today. Here's what the 240-minute chart looked like last night. We had made a break of the weekly open, which converged on this near-term slope just off the highs. That really gave us a little bit more conviction to favor the downside. Initial target's 116.12. That got taken out 115.47. We just grazed it last night. Here's what the 60-minute looked like last night. Here's what dollar yen looks like now. Okay, so you can see the low was actually 115.57, so just 4 pips off or 5 pips off that key bottom of that range. Again, to bring it back in price action, you can see some nice major swing lows here, multi-month lows. Nice pivot region, and again, converges on that median line. So I am looking for some support a little bit lower from here, possibly to give us a rebound to get back on the short side. Long story short, I'm looking for rallies to sell. With a break below this median line really needed to suggest that a more concerted high is in place. Absolutely, Juan. That was my next comment. Double top possible here. Yes. This is, in fact, where you want to actually use the double top as a measured move, and that takes us into the near-term charts. So here's what the trade looks like on the 4-hour. Okay, there's that near-term slope that we identified yesterday. Bring it to a 2-hour, give it a little bit more clarity. Okay, and he's absolutely right. Here's your double top. Low is formed, secondary top. You're looking for a measured move. That measured move comes by measuring this range. Come on, there we go. Oops. Okay, so the measured move of that range, okay, you take 100% extension of this advance. You're basically taking the range measurement and extending it off the low. That gives you a target down at 113.47. A little more aggressive for me, for my type of trading, because again, we tend to be a little bit higher leverage, a little bit more near term, but that's the objective measured move here. So if I do get a decent entry today, I'm not currently in this, unfortunately. If I do get a decent entry today, I would be looking to chip some off at 115.47, really just a very small amount. This is the more key target I was looking for, Juan. A basic 236. Okay, it's nothing fancy about it, but it converges. I'll bring it back to the 4-hour here. It converges on this, the 50 line of this ascending formation, which is still the same slope we've been working with, right? The upper median line parallel was resistance, was support. That's being tested as support now. A downside break looks for that 50 line, which again, we've seen a clear-cut pivot at. Resistance, pulled back, break through, support, and we moved right off. So that's 114.15, and also converges on a basic 236 of the entire advance off the low. So that's sort of my first target. Certainly 113.47 to 113.15 is huge. Okay, this is just a soft support target that I had eyed out. You also have that, like I said, the measured move. And that would be your secondary, more critical support structure here, I think, for dollar yen in the near term. Okay, still looks pretty good. If you're holding on to those shorts, I wouldn't get shaken out of this thing unless we break 17. As long as it stays sub 117 on the immediate term here heading into the U.S. session, continue to favor the downside. Look for that break sub 115.50 to really get some juice on this. Questions on dollar yen. By far, if you're trying to be long the yen, which is, again, on a broader sense, guys, obviously on a daily chart, that's counter trend, so we want to be nimble. But if I had to be long the yen versus anything, dollar is kind of where I want to put my money. Aussie yen's very interesting too. We'll go over that in a moment. But I'm concerned Aussie can get a little bit more upside before it turns over. Thanks for yesterday, Mike. The stop got saved by 0.6 pips, literally, says Pooja. Sometimes luck is better than skill, Pooja. I'm glad that worked out for you. Cheers. Yeah. We will take a look at that for sure. Any questions on dollar yen before we move off? Okay. A very big reactor to U.S. data. So for sure, tomorrow, dollar yen will be on the menu heading into non-farm payrolls at 8:30 Eastern. Okay, next up on tap from yesterday was Kiwi dollar. Here's what Kiwi dollar looks like on the daily chart. Very interesting price action last night. And there was room for pause. I didn't specifically get into this. The daily chart's kind of ugly, but I want to show it to you anyway. Remember yesterday in the webinar, guys, we were talking about this key resistance range, and we were expecting this rally into this key resistance. Now that we're trading above it, I'm taking a little bit more of a sidestep. I think it might get even one more high before it turns over. Largely speaking, I'm working with a 70.50 into 70.75 bearish invalidation level. Okay, you're looking at the 200-day moving average. You're looking at the upper median line parallel, and you're looking at those April highs from last year. Decent pivot in price. That takes you 70.55 into 70.75. So sort of a region of resistance I'm looking for on the upside. Am I interested in taking long Kiwi dollar exposure right now? It's a tough one for me to justify. If you look at the relative performance, Kiwi's actually the quietest performer. So if you had to be short the dollar, you want to pick and choose your battles, right? You want to pick and choose what's giving you the most juice for your money. So again, obviously dollar yen is going to be your ideal, our favored move. But even an Aussie position, I think, would be a little bit better off if you have to take something short against the dollar. Kiwi's been kind of quiet for me. So I'm not super excited about playing this from the long side, but if we do get a stretch into this region, I am interested in possibly looking for some short entries. Also, on the near term, look at this. So we highlighted this yesterday. Here's what it looked like last night. Okay, and I'll bring this into the hourly, just kind of match up what we were looking at. It's pretty clean as far as the structure is concerned. So here's what it looked like last night. Okay, and the reason I got so timid here, and I even said if this is a fake out, this level will hold, and a move back below 69.55 would put the short side back in play. Guess what? It wasn't a fake out. It came back, tested support or former resistance as support, launched higher, just missed our target at 70.35 before turning over, and look where we're rebounding off of right now, 69.55 yet again. So for me, this could be constituted as a basic break of resistance, check it as support, and move right off. An outside hourly candle off the lows, again, suggestive that we want to be looking for this pop higher here before we start to get aggressive on the short side of Kiwi. Nothing's changed from yesterday. I'm either looking for a rally towards 70.55, 70.75 like we look like on the daily chart to get short, or if we break back below 69.55, I'd be looking to play this into the weekly open that takes into 69.19 down here, also where the lower median line parallel converges. So as far as the levels of interest are concerned, I do think that the Kiwi is exceptionally clean. Again, for new exposure or new entries at this point, I'd be looking for either a sell from those topside targets, or if we break sub 69.55, look for a move on the weekly open. Any questions on Kiwi? RBNZ isn't really on tap till next month, so there's not really much event risk out of that. Do look for dollar price action to really be steering here. And it's interesting, guys, if you comb the headlines, whether it's Bloomberg, CNBC, or Reuters or whatever, you'll start to see all these different reasonings for why, we're seeing this material dollar weakness start to play into the markets. At the end of the day, if we take a look again at Fed fund futures, here's what they look like right now. There's still no expectation for a move from the Fed. Let me say this, the highest expectation is still June. Probability of a hike, okay, 69%. That's the first material probability that we'll see any type of move from the Fed. So that's not until, third quarter, second half of the year. So maybe the dollar is a little bit overdone right here. Maybe the Trump rally still may support risk assets. Doesn't necessarily mean the dollar is going to continue to rip higher. All right? So just some food for thought there. Questions on Kiwi dollar? Respect that 69.55 level. If we do get below it, I think it corrects back to the weekly open. But for now, I'm on the lookout. All right. Next up on tap was dollar CAD. Here's what the loonie looks like to start off the session. Really good player. It's been exceptionally clean. We started off the week saying, look, this thing's opening up and setting up a really nice basic weekly opening range right above slope support. Once that broke, obviously the shift goes to the downside. Initial targets was at that 50 line. That got taken out. The 618 into that swing low gave you 32.65 into 32.79. That broke. Basically, I'm still looking for a move into this 32 handle would be ideal. Okay, so if you're holding short exposure on dollar CAD, I wouldn't necessarily be shaken out on the short side just yet. We are responding to a near-term support structure which could offer some rebound, but I'm broadly still looking lower while below this median line near term. Bearish invalidation, as I noted last night, gets lowered from that median line down to 33.84. Meaning, as long as we stay below 33.84, I'm interested in selling rallies for dollar CAD, looking for a target inevitably of 132, just lower here. Okay, and I eyed that out yesterday. I think near 131.55 comes in the lower parallel, and that's the daily chart right here, guys. Critical region. The same formation that's been in play. That's actually a trend line that's in play for a while here off multi-year lows. Right, that comes in right here at 31.55 or so. A huge day tomorrow with non-farm payrolls and CAD employment at 8:30. Here's the CAD employment numbers are expected to look like. Unemployment rate is expected to uptick, just like we are expected to uptick here in the United States to 4.7. Here, here's a 6.8 to 6.9 unemployment rate expected for Canada tomorrow. It's a loss of 2.5 thousand jobs. Look for the breakdown of full-time and part-time employment. That's sort of been the story specifically for Canada. You've been seeing most of the gains has been coming by way of part-time employment, which is not necessarily a healthy thing for the employment sector. And the labor force participation rate is expected to hold at 65.6. So really that puts further, significance if we do see an uptick in the unemployment rate of that being a legitimate real uptick in unemployment. So you can see a scenario where if the dollar comes in or US NFPs come in more or less in line with expectations or slightly stronger, if we do see a weaker print in CAD, that could prompt a pretty severe rebound in dollar CAD. At the end of the day, that rebound would offer us a better position to get short, in my humble opinion. So watch that data print tomorrow. Again, if you're looking for new exposure for dollar CAD, if you don't have anything on the table right yet, I would be really, really light, okay, into tomorrow. Let the data print, let the market sort of give its initial reaction. Then typically I'll try to fade that move, specifically if it's exaggerated against our directional bias. Meaning if you get a decent rally up into 34, that might be a region of which you can start to look for a short side entry again. At the same respect, guys, if this thing collapses, you get really strong CAD data, let's say, and the dollar spills lower. If this thing does collapses, a drop into that 32, 31.55 region, I'd actually be looking for long entries down there. for a near-term rebound off that key support. Again, you'd want to use half your leverage. You'd want to be a little bit more nimble, but that's sort of the game plan. If this thing full-on collapses and I don't get a chance to get in, that's sort of where I'd be looking, again, for possible re-entry on the long side. Questions on dollar CAD. I do want to see what this looks like. All right, so this is what I'm going to do. I'm going to get rid of this 618, guys, because we probed deep into this region already. And we'll move that targeted range down here, just for the sake of listening to what near-term price is saying. So basic 100% extension. So this is just a simple correction, 2 equal legs down. That would give you 32.45. So I'd be cautious on any new entries into shorts into this region. And again, 32 being the ultimate goal here, just on account of near-term slope and where we are in time. There was a note out today. I was reading on. Hey, Conwell, what are you referring to there? I'm sorry, guys. Conwell, what are you referring to there? 3155. I'm not sure what asset you're talking about. If you want to reword that for me. But I was reading a bank note here today, guys. I can't remember if it was some, I'm pretty sure it was from Citi. And they're also not too keen on getting short or continuing to remain short at this level. But they are ultimately looking to buy at 32. And I hate to be on the same side as the banks, guys, believe it or not. It's actually pretty astonishing how bad they are. But I think they're on the right track with this one. So even a blind squirrel will find a nut every once in a while, right? So if it does spill into 32, maybe 31.55, that slope level there, make sure that we look for, or be on the lookout rather, for a little bit more of a reactionary bounce from that level. So Conwall, there you go. He's talking about dollar CAD. So 31.55. I think you have it. You typed it out wrong there. You typed out 31.55, which is why I got confused, Conwall. But 31.55 is the level I'd start to look at for entries. You might not make it quite that low. Like I said, here is the slope, which has been pretty decent. I don't want to stress it, but it converges on a 764 just right around that region, 32. So this is the first level I'd start to look at based on what the momentum signature is doing at that point, what's happening in broader dollar crosses. I'd look to assess it once we get there. If we're something like this, and guys, what was it last night that I was saying that? Where was he? Yeah, so here's the dollar CAD yesterday, right? Last night. And as we were coming into the 64 region, I even said, you could get a bounce from this region, but momentum is still pretty heavy, so don't try to get cute with this. And I still mean that, Conwall. I don't think you necessarily want to tempt the waters trying to get long just yet. This, if we do materialize and close, what chart is this? A 4-hour? Close above 30, it might be an opportunity for a near-term break higher. Again, it's the correction back above 30 that would be your signal to try to press this higher. As long as we stay below here, guys, it's a tough sell for me, especially on this 4-hour chart. If we zoom into a 1-hour, we're already back above, well back above oversold conditions. And this was actually a decent trigger here as you had momentum divergence into those lows. And if you bring it into a 30, you actually had a pretty decent trigger. I was looking at this morning. Right? Whoop. So you had a pretty decent trigger, divergence into a trigger break. That's how those are your ideal entries, guys. Obviously counter trend. So it's harder to push the trigger on this. And I'm the first guy to tell you that, especially when something's in free fall. We don't want to get into a habit of trying to fade every move like this. But coming into this support, it's something to be mindful of. Ultimately looking for a drop into 32. Near term, stay bearish, sub 33.84. Questions on dollar CAD? 1 hour. All right, moving right along. Euro Oz, an update last night. I don't want to spend too much time on this because, again, it's been kind of lackluster. If you remember, we started off the week looking lower. Our target was down here at 143 into 143.20. It just missed. Again, a lot of momentum really waning into that low. You saw some clear-cut divergence here I highlighted yesterday. And then the rebound coming right here into resistance. We're really not doing anything beyond that. It's kind of just came into the resistance and pulled right off. Based on the momentum divergence we saw yesterday, based on what broader positioning is doing, I do think, like I said yesterday in the update, you can get one more stretch high. One thing I was sort of focused on is this region here. If we take the same slope, guys, of this ascending median line formation, same slope, and just extend it off one of these swing highs, basically trying to connect that low. That converges there as well. I don't want to stress these lines, but sometimes they can be helpful, specifically when they converge on key retracements, longer-term moving averages, etc. So I do think you can get one last stretch higher into that region. Ultimately, you'd need to see a break sub 143 to validate a full-on reversal here on EUR/AUS. Remember the broader picture for EUR/AUS, right? Support, break, resistance, resistance, momentum holding. Can't get into that 70 level. You got a clear-cut trigger. Key support, bullish invalidation, 143, which is also the 2016 low day close. Okay, big, 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 big support level. So I'm kind of neutral right now. I think you can stretch high into 143.50. If you get there, I'd be looking for possible short exposure. 143 is the level to beat as far as trying to call a full-on reversal. And I do think from what price action has done against this region every time since the break, ultimately I do think you look lower. That's the level to beat. That is Euro Aussie. 1 was 2, 3, CAD was 4, Euro Aussie is 5, Euro Yen was highlighted the previous day. So, Euro Yen had basically set up this. 618 retracement, 123.47 key resistance. We're looking for the pullback against that level. You had some radical divergence here into those highs. You're coming off the median line, so inherently you're looking for a move back towards this 618 line, if not right back into key support near 119. Here's what it looks like right now. I guess there's really not much to say for this. It looks like it's beginning to materialize lower. Okay, you don't exactly have an outside day reversal. The high here was 123.12. The high here was 123.11, a fractional 9. So literally, we're talking about fractions of a pip, but the price action still speaks in that we're making a move below the weekly, monthly opening range lows. Now, we're not really closing below there right now. We're kind of testing them. So I am looking for this break to materialize here in U.S. trade today for a move back into the median line, if not a full basic 236, which would take you to 120 again, 96, this region here. So, broadly looking lower here in Euro Yen. Hopefully this finally starts to materialize. 119 being the major key support on a full-on correction. Obviously, this will be determinant of time based on when this breaks. But the initial downside move, you'd be looking for that move into the 618 line here, which has been perfect support, previous resistance, and then a basic 236 at 120.96. That median line currently comes in near 121.30. Questions on Euro Yen? Bear with me one moment. wee. 121.30 on the dot. Nice. All right. All right. See if we can get this this baby cooking. Again, objectively, forget what Mike Boutros says, forget what Jamie Setley says. Objectively, here's your weekly opening range. You made a low yesterday. You tried to test the weekly open and failed yesterday, and here's the break below the weekly opening range low. Look for that drop into 121.35. By the way, the stop on any type of short exposure here or the near-term bearish invalidation would still be the weekly open, okay? So if we do make it back above 123.17, I would kind of want to clear out of any short exposure. Okay, Euro Yen finally getting the turn. It's been a couple of weeks just sitting below that 618. So let's see if we can't get that moving lower. That was number 6. I want to take a quick segue to talk about Aussie Yen. Pooja, like I said, you got me all interested and hot and bothered with this yesterday. It reversed right off that level pretty clean. 85.54 was sort of the objective level you were looking at. That's sort of the swing high that we made the opening range for January. But also you had the median line here for the current ascending structure off the lows. So broadly speaking on the daily chart, specifically on the fact that we closed back below it yesterday on failure, you're looking lower. On the intraday chart that we set up yesterday, I mean, I'm still going to work with this, Pooja. I still think that's a really good structure to work with. I don't want to stress it too much, but literally, you know, that level that we added yesterday, the 50% retracement converging on that 50 line, literally caught the lows. So you got a little bounce there, move lower. This is still the level to beat, 84.50. If you do see that level give way, next side targets would be the open for the week, 84.23, and major support down here, which would be 83.76. That's just a swing low, the lows from last week, and the median line for the descending structure right there. So I still like it. You know, I know that Aussie is not really performing or not really giving us the move upward that we want, the move downward versus the dollar that we want to see per se because of dollar weakness. But I think this is a good alternative. Not my favorite yen cross, but definitely on the menu. Okay, definitely on the menu. And specifically heading into non-farm payrolls, again, typically, quote unquote, a risk correlated pair. I hate to use that term because it's not really quite as lockstep, but definitely could see some reaction on this tomorrow. Okay, looking to sell rallies while within this formation, ultimately targeting 83.76. Pooja says, I got out of my trade because of Aussie dollar and also in NFPs. I don't blame you, Pooja. If you were looking at Aussie, I would have started getting concerned too. I'm not surprised to hear you say that. And non-farm payrolls, look, I don't want to necessarily abandon trades because of upcoming event risk, guys, but certainly cause to lower your leverage, take some off the table, specifically if you're in the money, and bring those stops in a little bit. Now, heading into the actual print, if you are in a position and you're in the money, you want to actually open the stops up is typically what I want to do. I want to give the market some cushion. I don't want to lock myself into a tight box and try to fight my way out, right? So if you're going to be holding positions through it, longer term, medium term trades, swing trades, you know, you want to open up your stops and give yourself a little bit of breathing room. But Pooja, I don't blame you. Don't blame you. So Aussie Yen, look at that break sub 84.50 for a target of 83.76. Bearish invalidation 85.60. Eileen says, Pooja says in all caps, I fear NFPs. It never works out. Look, if you haven't had luck with it in the past, sitting on the sidelines, being flat is a position. A lot of people tend to understate that. Everyone gets FOMO and they want to be in a position during all the volatility, but if it's not your style trading or you've had trouble with it in the past, this is a good time to kind of study what the market reaction is as opposed to trying to force a trade on it. Now Eileen really saying, and I say fear NFPs too, since you keep saying Eileen, I agree. Cheers, Pooja, Eileen. Always great to see both of you in the room. Any questions on Aussie Yen? Going once, going twice, sold. Here's what Aussie Kiwi looks like. Aussie Kiwi was highlighted, I think, a couple of days earlier. Here we go. And we were looking for the material rebound that we got. Really, really clean. This was a huge rebound that we saw early in the week, shifted our focus right to the upside, right on the bat. This was slope support of a basic parallel that we've been following off the 2014, January low. I'm not going to go over this all over again because you've seen it a million times, but we're basically looking for the material rebound here to get into 104.96 ideally, and I hate to use that word, but 105.47, 105.50 would be a clutch spot in my humble opinion to start looking for some more rigid resistance or the breakout, but that's sort of my ideal scenario. Here's what Aussie Kiwi looks like right now. So here's the daily. There's that slope, really clean, almost to the pip. We just turned ahead of it, and there's a nice confluence there with the 786 retracement of, this is the longer term retracement from the decline off, or the ascent rather, off of the 2015 lows. There's that 786. Caught the lows back here. Kind of probed through it back in September, but there again, converging with the same slope. Extended off the low, parallel. You're seeing the upside thrust. So yesterday we capped out right at the 100-day moving average. No surprise. You're seeing a little bit of a kickback from there. Looking for the ultimate break. Target 104.62. 104.96. Followed by this key region into 105.47, 105.40. Keeping in mind, 105.40, by the way, is the exact low that we made in January of last year. Really nice pivot. Support, resistance, resistance, converges on the upper parallel. So it's been a 3-day rally off the low here, consecutive. You could see a little bit more failure into 104.96 with a pullback from there, but ultimately I still think this stretches closer to that 105.50 level, 105.40 level. Hey, Pooja, I appreciate that. I'm going to send it over to Eileen. It says, thanks to Eileen, Pooja's saying, for asking all the right questions and resolving so many of my doubts too. Cheers. I'm all about bringing the conversation so it benefits everyone, guys. So if you have a question, there's someone in the room who probably has a similar question. Don't hesitate throwing it on the message board. Eileen says, you're welcome, Pooja. All right. Any questions on Aussie Key? Still think there's further upside in this. On near term, on the immediate move, this could be a 1, 2, 3, 4, 5, and you could see a little bit of a correction on a move lower. I want to stay positive, or I want to stay constructive well above the 104 handle, essentially. Any structure to this, I wonder? I won't stress that, but if we do add that, look where the upper median line parallel comes in, guys. 105.50, right on point. Right on point. And that is Aussie Kiwi, number 8. So that covers the pairs I wanted to cover. I do have your Juan, I still have your CAD yen and pound CAD. I will come back to those. But before I do, I want to take a quick run through the commodity block. Nat gas, gold, crude, and silver. Let's take it in that order. That'll be number 9 is nat gas. Here's what nat gas looks like, Conwall. So it continued lower yesterday. It's a good thing that you bailed on that long position. Okay, still not the cleanest trade, in my personal humble opinion, but you broke below that 38.2, which was 132.28. That's what I was talking to you earlier in the webinar. You're asking on any type of long. That's the first level you need to get through. It's the close high for October, just above that at 330, I believe it is. Close 330, yeah. And then you have 329, which is going to be a basic 38.2, which could offer some support or some resistance on the upside here. I do think you do get a little bit more of a concerted bounce, but ultimately still looking lower. We're kind of starting to lose focus on this. Let me see if the 618 actually caught that. Oh, perfect. There you go. Okay, so take that 618 line instead of a 50 line on this pitchfork. And you actually get it catching the lows pretty nicely that we made an overnight trade. Long story short, even if this rallies towards 335, I still think you want to look for that inevitable stretch down to 311. Okay, 311 into 310 is pretty big. That's a 50% retracement from the advance off the lows that you made in November, but it's also the swing high that you made here in 2015. So kind of a big region. They both converge on the median line. Support, resistance, support, support, resistance. Should offer some support. And within the next couple of days, that 100-day moving average will be slipping right into that region as well. So keep your eye on 311, 310 as a little bit more of a critical support structure in my humble opinion. Near term, looking at the left here, you still have that slope way lower down to 303. Okay, and that's actually where the 100-day moving average is right now. A little bit lower than that even, 301. So you get the picture. Bearish below this median line. I'd like to look for short exposure on a move into 335. Downside targets 311 and that lower parallel. Let's just call it in that whole range into the 3 handle. Okay. What else can I tell you about this? Well, you're getting momentum popping back above 30. So I'd be looking for, let me take one step back. Although we're looking lower, I wouldn't be short from here. If you're holding short exposure, great. Put that stop just above that swing high that we made in overnight trade, or yesterday rather, and let this play out into those downside targets. If you're looking for new shorts, you gotta let this thing rally higher first. You do not want to be trying to sell at the bottom of a multi-day range. Here's the 1 hour. Actually had some really strong divergence into all those lows on every time frame. Here's the 30-minute. Here's the 1 hour divergence. Here's the 2 hour. Still divergence, right? Interesting. So keep those levels in view there on nat gas, Conwall. Quick look at gold. It's interesting because we talked about gold last year, coming into the start of this year, about this key 1120, 1130 level. Y'all heard it. You've been hearing it for the last, 3 months as a major critical support level. It is what caught the lows in gold, and here we off to the races right on a rebound of that region. As Jamie noted yesterday in the webinar, or I hope you noted in the webinar, is that seasonally speaking, gold actually has some pretty nice tendencies to move higher in January, early in the year, and basing off the December low. And that's exactly what we're seeing here this year. So look for near-term resistance or a near-term pivot near this median line, which has been very, very sharp. Look at this, guys. Resistance, resistance, messy support, picture perfect support, break, picture perfect resistance. That gives you topside right now. We're around 1185, 1184. Ultimately, 1200 is kind of what you want to see. That's the May low, and that's the former 100% extension from the decline off the highs you made last year. Really nice pivot in price. So, long story short, I still think you get further upside here. 1185, you want to start to curb that appetite in the immediate term. Look for the pullback. You stay constructive while above the monthly open. Okay, that's 1150. Inevitably looking for that run into 1203. If we break 1120, by the way, I think it's game over for gold. That's not the base case scenario. Base case scenario, we make it back in 1200 first before anything major happens. To refute the broader downtrend, you would need to clear this. That's up at 1217. So first things first, 1185, 1200, I'd be capping out any type of long exposure. If we break through 1215, 1216, that's a different story. We'll cross that bridge when we get there. But right now, I want to stay constructive above the monthly open, targeting 1185 and 1200. Questions on gold. And if the dollar breaks in term support on that daily chart that we looked at early in the session, look for those dollar losses to further fuel the upside here in gold. That is number 10. Any questions on gold? Okay, crude prices look like this. Also a big headline maker over the last few days. Lo and behold, we talked about 54.29, 54.21 all day on Tuesday as we were trading well above that region. Well, that day closed well below, and we're still going to respect that as resistance. Bearish sub 54.21, 54.29, near-term support unchanged at 51.64 into 51.40. It's initial support. Any levels for trading? Yeah, Conwall, so the levels haven't changed here. Let's look at the intraday and see how it looks. Hey, look at that. Here's your weekly and monthly open. Okay? Offering some resistance. This is my near-term bearish invalidation level. And it looks like 52.39 did catch some support yesterday, but there's that key region, 51.40 into 51.65. Initial support. All right. Can't stand to see a mislabeled tag. There you go. So feel free to take a snapshot of that if you need it. But it's all the same levels from yesterday. I just think you want to stay a little bit more reserved as far as trying to pull the low side or pull the short while below 54.50. I still think it looks lower. 54.40 still looks lower. It's way too early for this, guys, but I do want to just see what this looks like. Bear with me one moment. I'm going to bring this back into the 50. Well, the upper parallel converges right on that same region right now. And again, you have no conviction on this whatsoever because you don't know that this is a concerted high yet. Although we like to use, we're working with that assumption right now, still highlights the possibility for further downside in my opinion. Euro dollar is ripping, says Eileen. What's going on? Let me see that. Euro. Yeah, so Euro's stuck in this thing. I'm not really surprised to see this at all. Euro's stuck in this thing. If you haven't noticed, guys, I haven't written about Euro once this year yet, and that's for a just cause. I might do it today for daily effects, but I'm not going to highlight it here on SB. I don't think you guys want to be getting too cute with the Euro. Look, based on what the dollar is doing, if we cross 106, that's sort of my line in the sand. I didn't want to touch this thing until we look at that level. If we cross 106, the 50 line for the structure that we were in for a while last year, I don't like what price action was doing in December, okay? All I can tell you is that region at 103.73, which is basically derived from, what low was that? The 28th. Yeah, I don't really have anything to say on this. I have no conviction on Euro, guys, at all. Not Euro dollar. If you put a gun to my head, I would say you want to be long, just because of my broader bias and what's going on with the dollar index and the basic broader dollar story at this point. But Eileen, as far as like the technical clarity on this, I just really don't like what's been going on with intraday price. You get these really strong stretches and very long wicks. It typically tells you there's a lot of indecision in the market. And those are kind of when you want to play the ranges. You don't really want to look to play kind of a breakout, right? Here's a long wick, long wick at the highs, long wick at the lows, and it's kind of just been whipsawing. I kind of want to see a resolution above 106, like I just said. That would be a near-term tell, if you want to call it, for me to get long. All things held constant, this does not have my attention. Doesn't have my attention. Maybe shorts with 106 from a signal. Yeah, but let me take a step back. Typically, yes. 106 offered a really nice resistance last week. It's a pretty decent region right now. It crosses on that 50 line. It crosses on that median line. Sure, from a scalping standpoint, intraday, Eileen, I'm with you. But do I really want to be long the dollar? It really depends what the dollar is going to be doing at that point. Look, if dollar is firmly below this support region, and we're in this region, I don't necessarily want to tempt it with a long position, right? I.e., short euro dollar. So there's a reason I haven't been talking about euro dollar. I just don't like where it's at right now. I think there's more, there's clarity elsewhere. Although it's actually been giving you a decent range, it's just too stern for me right now. All right, so that was a little quick segue over to euro dollar. Let me put that as number 11. Crude prices that was actually number 11. This is 12. Copper. Sir, your levels are so precise, entry and exit. Very helpful in trading. Thank you. I appreciate that. Cheers. It's what we aim to do. Here's copper. So, the daily chart really has some work to be done on it here, guys. Let me kind of shape this up. I do want to look. Does this trend line have any merit right now? Yeah, it could work. I'll leave it on there for now. But we were following this yesterday. Yeah, it's pretty darn close. So we were following this yesterday, guys, which is basic median line off the highs here. Remember, we added this in, and we talked about the fact that nice little reaction off that, and we highlighted resistance into 256, 255, this region right here. We shot right through it and came right back. I do still think you want to respect that near-term region of resistance. And I'm also going to label this, forget that 100% at this point. Okay, this is going to be near term. What you want to respect as near term resistance as your near term bearish invalidation level for the decline that we're seeing off the highs from last month. Actually, this is a November high, stand corrected. But certainly, this is resistance right here, any way you put it. No divergence here yet. Let's see what the 2 hour looks like. Okay, so here you're seeing much, much stronger divergence, right? And this is kind of the benefit into drilling down into price and using multi-time frame analysis. So here's your oscillator making a series of lower highs, and price action making a series of higher highs. And when you see something like that, your initial sort of trigger is something like this. And these are always going to be your strongest triggers. Divergence into a trigger break. Stop against the highs. On copper, you don't want to really work with a quarter of the daily ATR. You want to kind of focus on what level prices you're looking at. But I still think the risk is to the downside sub well below this region right here. Let's call it 258. There we go. Support is where? Initial support is 253.6 right here. That's just initial support. I'm just eyeing that out. That's just the initial range highs that you saw here into the week of the 27th. But your more critical support structure is 250. Okay, that's the 618 retracement. And the monthly/weekly open. By the way, just to put this out there, Conwall, I'd be using 260 as invalidation for a breakout. If we get through 260, that would sort of nullify this low, nullify this trend line, and this cluster of resistance we're looking at right here. So I'd be using this as sort of my breakout zone for a move higher in copper. I mean, it's broadly supportive, guys. Don't forget. Don't get too excited. This is broadly a breakout of that multi-year formation. Break, check a support. Ultimately, I'm looking higher. It's just that I do think you need to make one more low in this before return. That's all. Okay. Copper was number 13, and moving right along, CAD yen and pound CAD. Let's take a look at these. Again, I'm short on time. I don't have any setups on these per se, Juan, but let's take a look. Pound yen first. I'm sorry, where's that? CAD yen. CAD yen. Okay, so obviously we didn't take a look at this at all last month. Here's the December open. And here's the January open. Okay. Okay, I'm going to leave this 38.2 here just for the sake of the pivot that we're seeing. It was the exact low back here in August of 2015. It was a nice pivot in price both in March and April last year. If you look at price, really clean. And even, last month. So I'm just going to leave that there as sort of a near-term pivot. We're testing it right now. Let's see what the near-term charts look like. Yeah, this is pretty basic. I wouldn't do. Well, let me just say this. I would be treating this as just basic range. It's a very clean weekly and monthly opening range just below resistance. Is that slope pretty similar? Wow, that slope is dead on. So yeah, I like this. I would like to look for a clean break of this near-term range, which is just below resistance. Again, if you put a gun to my head, I would say this is probably going to spike up one more time, then start to collapse. But broadly, I'm looking lower while below this upper median line parallel. Just remember how long we are in this formation. Okay, this is the high from 2015. So certainly it's a formation that's held for multiple years at this point. And yeah, I'd be looking lower. I'd be looking lower. ABC pattern possible, currently trading the leg CD. Yeah, I could see that. I could see that. I don't really like the structure of the decline here per se. This could be a 1, 2, 3, 4, 5. not really the cleanest, and you'd want to see a little bit more of an extended 3, but could be. Yeah, coming into you're basically coming from C to D now. Yep. Look for a break of the weekly / monthly / quarterly open here, which is offering clear-cut support as we speak. And that's basically at, what is that, 87.10. So if we see a break below 87.10, 86 is the break that would suggest you have a near-term top in play, just to look to play the correction. And in that type of scenario, your basic retracement off the low here is kind of where you want to go with that. Yeah, that would risk a move all the way down to 82 in my opinion. That's a lot of CAD weakness and a lot of yen strength. So with my conflicting opinions here on what's the dollar CAD and dollar yen are doing, I take a little bit more of a reserved approach. But yeah, I would say it'd look lower here near term in CAD yen. Again, I'm just taking a first fresh shot at this for you at one for the year. He says, thanks, thank you, much appreciated. You're more than welcome. Pound CAD might be a little bit easier here. I don't think I'm too far off on that one. We looked at this late last year, I think, if I'm not mistaken. Okay, you're testing the 618 retracement of the ascent off last year's low right now. You're sitting on it. It's been a one-way track downside move since the start of the year. Not surprising, relative price action in pound and CAD have been doing just that. Okay, let's see what the intraday chart looks like. Well, I can't say I'm excited about it. I guess that would work a little better. Can't say I'm too excited about it, but this is what I would be looking at. It basically keeps a downside focus in play while below the weekly, monthly, quarterly, whatever you want to call it, yearly open. Right here at 168, 165.80. I know that's a far stretch from where we are right now. I don't know if that offers you much assistance, Juan, but I would be looking for a possible near-term recovery off this level. As you saw, that 30 held as support here in the momentum signature. And there's actually a trigger that is sort of waiting right here. So if we do see a topside pop, look for a rally back towards that upper median line parallel. As long as we stay below the monthly open, I think you inevitably look for a drop. I mean, on this pair specifically, it's tough to call. I don't even know, because here's the thing that I've been looking at with a lot of the sterling crosses. I think the sterling is in for a little bit more of a recovery play early in this year. So I don't want to get too, crazy bearish on the pound crosses as it stands right now. But look for near-term support here at 63.57, bearish sub the monthly open there. Juan, does that help? He says, perfect. Thanks, you're more than welcome. Any other questions, guys? I am way over on time, but I will entertain any other questions before we close out the week. Remember, tomorrow's key event risk with the non-farm payroll and Canadian figures at the same time. And 1,000 thanks. Enjoy the rest of your week. See you again. Eileen, same to everyone here in the room. Best of luck trading. I'll keep you updated tomorrow morning as we go through the NFP prints. And I will see you all next week. Have a great weekend, guys. Cheers.